little green dashes, and the bull G hasn't figured out how to improve on those green dashes just yet, but I'm sure he's a bit slow that way, but I'm sure he'll get there. You know, it just takes him a bit of time, but so you know, he's getting there, so bit by bit. And you can see what happens: buy, sell, sell, buy, sell, buy, and that's the only triggers you can see. There hasn't been any since then. And the idea, of course, with these triggers is to try and get spreads out of them. We're trying to try and pick up 50 bucks. You know, you imagine 50 bucks, guys. That's hardly anything, isn't it? On a spread. So you've got 1, 2, 3, 4, 5, 6. If those 6 trades can make you 50 bucks, you can make $300 this morning based on those 6 signals. So that's the target. I mean, $300 on a single spread, that's not a bad outcome, is it? It's not a bad outcome. Now, obviously, if we can do $600 on a single spread, that would be even better. Sorry, $100, giving us $600 profit this morning. So what happened to those 6 triggers? Let's take a look at the 6 triggers that we've had this morning. And one of the key components, of course, of the 6 triggers this morning is, well, what happened? So these are the 6 triggers. This was the buy trade. This was a sell trade. This was a sell trade. This was a buy trade. This was a sell trade, and this was a buy trade. Now, to put this chart into some sort of perspective, this sell trade here is worth over $100. Now remember, we're trying to get 50 bucks. So if that trade there is worth over $100, and that's the worst of the lot, we had a second trade that was pretty much the same size in terms of size and shape, just here. You can see every other trade was significantly in excess of $100. Quite possibly with a target of $200 each trade. Wouldn't be unrealistic for this trade. Easily doing $200. In fact, going all the way up to about $500, $600 a spread. So you can see $200 here, $200 here, perhaps a scratch here, you're $400 up. $200 here is $600, a scratch here, and a scratch here. That would have meant potentially, well, actually that wasn't a scratch, that was a $200 trade as well. So $200, $400, $600, $800 potential at $200 target and 2 scratches. At $50 target, of course, then all of them achieve target and we end up with a $300 profit. If we go for $100, they all achieve $100 and therefore we get $600. So, you know, obviously over time we'll get a better idea of what exactly the target is, the best way to utilize the signals. There was a couple that I've got question marks about. There was a buy trade here potentially. There was a buy trade here potentially that didn't signal trades, and that's what I'm looking at. Is, and you can see that trade made $100 at least, and that trade made $100 at least. So there's a couple of questions, but you know, on the whole, I'm very happy. Now, a lot of people will look at this and say, what the hell happened that we didn't get this big spike? Remember, trading value isn't about catching spikes. It's about catching value. It's about catching an edge. Sometimes a big moving market has no edges. It's just a big moving market. The only edge is in the momentum, of course. And that's when we start finding the edge itself. But a lot of trades don't have edges. A lot of trades, big moves, big swings don't have any edges to take advantage of them. That's why they're big swings, of course. And that's because people are chasing getting value. They're not getting value at the top and they're not getting value at the bottom. So they have to chase into those values. And as a result, you get big trends. So a lot of big trends, and most big trends, don't have any edge in terms of relative value. Relative value comes in the form, most of the time, of things like stops, prices that move out of line, little edges that start setting up. Now, oil's been a massive edge for us recently. As you well know, we've had an enormous edge on our oil trading, and we've had some incredible trades. And we went from the beginning of this morning's buy on oil to the end of this morning's buy on oil. And myself and Cliff, I don't know who else has been involved in this little bad boy, but my goodness, we've rattled it. We really have given it a right good doing in here. And we were talking about the buy at the bottom. We talked about the buy here. We talked about the buy here. We talked about the buy here. And we talked about the sell here and the sell and the pullback and the sell here. We even talked about the buy here, but when we were in the room live at the time, and that was at a price of $71.30. It subsequently traded $71.60. So for anybody that was live with us this morning in the room when myself and Cliff were talking about specifically the oil, you'll know that there was a whole host of reasons why this was a very interesting buy trade, and you may well have been able to take advantage of it. I know Cliff was in it with us, so we certainly were able to take advantage of a buy outcome from that as well, which is great news. Now, you can see that there's a lot of profiles in this chart, and that's for a reason. We were discussing the concept of the taper. We were discussing where taper becomes taper, where it's not taper, and trying to use that information to the best effect. We were adding some values to it, and of course, the outcomes on this were incredible. Discounted guarantees, premium guarantees. The concept of discounted guarantees has also overlapped into the cable market this morning, and I showed the guys very clearly this morning about this idea of getting discounted guarantees and why it's called a guaranteed discount, why it's actually got that name, because it's a discount price that's got a guarantee attached to it. The guarantee reads something like, if you look at the small print on the back of your guarantee certificate, it reads something like, you're guaranteed to not lose any money if you put your stops in at break even relatively quickly. That's what the guarantee is, guys. That's what the guarantee is. And one of the things you start to recognize is this concept of guaranteed something or another. And I've had 2 guaranteed opportunities on cable. We talked about this cable as well this morning in classroom. And I also tweeted this cable out for anybody that wanted to join me on cable. You could have done so, of course. And if you look at cable, you'll be able to recognize that that is exactly what we tweeted. Bid watch against a positive 2s, 10s, GB and a top edge equity hedge if needed at 12 o'clock, of course. And you can see that based on that storyline, we were buying into this. Now, if you decided to join us after the tweet, mind, you would have got a price that was about 1 tick different from the price I got on the bottom edge. Now, that price at the bottom edge, of course, was a wholesale price, and you can see we've had a nice outcome from that trade again. 138's up to a high price of 138.30s, Cliff, Paul, Seamus. 30 pips of upside profits live in the room for anybody that can read and press a button at the same time. Unbelievable. Unbelievable. But anyway, we're doing some pretty good business here, guys. Pretty good business. We've just gone half back on this trade now. We've gone half back on this trade. You can see we've just gone through the half back trade level. Nice location to do a bit of business, take some cash off the table just into this little uptick here just now. These are all live calls, not hindsight calls, but live. And Seamus, well, that's the problem with the Irish education system. I mean, they teach you everything else, how to drink Guinness, but they don't teach how to read and write. It's a pity, isn't it? But anyway, one of those things, guys. You gotta love the Irish. You gotta love the Irish. So we've had a good day, guys. We've had a good day, and one of the things that we understand about trading, and I took a screenshot so that I could show you. In fact, I didn't just take a screenshot. I showed the guys in the room this morning, and it was Seamus, Michael, Big G, Stu, Bob, Nori, a few of the guys were all looking at it, and they were all looking up, and they all went like, you do know you're losing a fortune on your bond trade. And I was like, yeah, I do. And obviously we were too busy eating our chicken tikka masalas at the time to bother doing anything about it because it was a macro trade and I was mirroring what the bank trade was. And and I was putting on a Ninja Trader because I wanted to show you the difference between how an institutional trade works against what we show you in the classroom, which is an institutional trade, as well as the way that we teach in the classroom is different, isn't it? So I took a screenshot and I posted it. And what I did was I overlaid, I put back on the buy plots and the sell plots, because usually I don't have them on the charts because they're bloody messy. And I put the buy plots and the sell plots on so you could see what the trade looks like as an institutional trade. And I took a screenshot so you could see it. This was a trade I took as we were coming into the guys' night last night. You can see a block of sell orders. Now, some of the guys were looking at it saying, "What the hell? You're down about $15,000 on that trade. What are you doing?" And then we added more to it. But look at, they're all sell orders. Every one of them is a sell order. This is what an institutional trade looks like. See how we've got a sell area, and then we've got another sell area. There are no buy trades. There are no efforts to buy into this as a process. There's no stops. There's nothing that taking prices out. There's no exits. There's no aggressive activities. It's just sells. And there's lots of them. And the sell drops in the overnight session as we would expect. And you can see that there's no buy orders on the screens. There's no little buy dots anywhere to be seen. And then at the very bottom, close. See the word? Close. See it? The very bottom? Close. So we sold the top edge bonds. We added some positions to the top edge bonds. And we closed the position on that yellow dot on the rejection. That's an institutional trade. It's not a retail trade. The reason why it's not a retail trade, of course, is because a retail trade would still be the sell trade. It'd still be the sell trade, but it'd be a sell on the way up, take some profit, stops at break even. Sell on the way up, take some profits, stops at break even. Sell on the way up, take some profits, stops at break even. And then when it goes, you may have a few contracts still on board, and then the target price exactly the same. Our trade is sell on the way up, sell on the way up, sell on the way up, and sell on the way up. It's all sells. And then the exit at the bottom. This trade on Ninja Trader, this trade on Ninja Trader was a profit of $71,000. $71,000, guys, because I had put a little quick Ninja Trader account together to show some of these. Remember, I was talking to the guys about institutional trading for the bonds. I'm just doing what I was talking about. I'm just showing what I was talking about on this trade. Doing as we suggest, doing the institutional trades so that you can see how they eventually evolve into. This trade made a profit of $71,000. $71,000. Now, you know, for any institutional trade, and as I said, I set up another quick account on Ninja Trader just to show how this trades out. And this is the profit and loss for this morning when that trade was closed. You can see that the idea of the trade itself was enormous. Look, $71,300 profit on that trade itself. Just that trade. From sell top edge to buy bottom edge. So when you start recognizing some of the basics behind this, when you start recognizing some of the basics behind some of these trades, the big institutional trades, you can start to make sense of how the banks actually work. This is why when I suggested a few days ago to the guys that trade bonds to try and do institutional trades, not on their own live account, because you're obviously maybe going to take bigger stops and you're going to do bigger positions to try and just to try and understand how a bank deals in these areas. And then we can show you a trade that then does $71,000 based on that very principle that we were trying to get you guys to adopt as a practice. And you can see the trades in actual practice there, selling into the highs, exiting at literally exiting at the lows. You suddenly realize, wait a second, there's a lot in this bank opportunity. It's monstrous. It's massive. And that's what we're trying to get you guys to understand, is the way that the banks actually trade, the way that the banks actually make the monies. How do the banks get so large? Why do the banks always seem to win? What are the banks doing that I'm not doing? You've got to try and find a way into that story. You've got to try and find your way into that story, haven't you? How can I take advantage of that information? How can I take advantage of those little trades? Big spike on gold. Well done, guys. Nice spring trade, by the way, on the buy side. There's the spring trade. You can see the build of that buy trade happening in the background. Take a look and see for yourself. So take a look at the real yields. You can see that there's obviously a very large exit process here. So there's your exit process right there in gold. And based on that, you know where 3 is, don't you? Yes? Don't you know where 3 is? Abso-fucking-lutely, you know where 3 is. Where's 3, guys? Well, you go from the bottom edge to the pullback, and then you draw simply the target price for 3. The target price for 3, which is also called a guaranteed discount. 3 is always a guaranteed discount. So even if you're not happy about the trade, you still can buy with a guarantee. What's the guarantee? The guarantee is that if you buy that price, you will be able to get your stops to break even. That's what the guarantee is. So when you buy at that price, you will always be able to get your stops to break even. And when you take up the guarantee, because you're maybe looking at the short-term supply that's coming in and the real yields, you start saying to yourself, well, I can always get my stops to break even at this area. I'll take advantage of that guarantee. And the price stops at break even, stops out, stops at break even, boom, profits. Value starts building, and we come back into that baseline demand that we have there in the background. You can see that baseline demand. You can see a little technical break off that change of behavior there, and it gives you almost a perfect opportunity to maybe buy some more. Can I have some more, please? And then we come back into the next level, another bit of battleground politics in here, and you say, right, we're trying to get busy here, we're trying to get ill, and sure enough, that spring trade that came off of that little trade there was sexy, really sexy, wasn't it? That little spring trade there was superb. And then sure enough, perfectly right into what price? Yes, indeed, the measure. When we look at that shape, we can start doing some measures against some of these brackets, and we can say, well, where's my target price? Damn it. There's my target price right there. There's your target. And what happened at the target price? You took your monies. You got some cash out of the book, and you says, you know what? Give me some cash. Give me the cash. Show me the money. And there's your next opportunity. Demand coming back in, sweeping back in behind these little moves, and then just drawing in the demand areas and saying, we got it. We got this all together here. We got this all together. It's beautiful. It's not that difficult. It's not that problematic. You can see how easy it is to form those opinions. You can see how easy it is to lean against some of those ideas. Where's the next target price if we get a break higher? Well, of course, the next target price is now moving the needle, because we also have a big bracket here, don't we? From that exit price down into the low print. One of the things you'll be able to recognize is the spring trade, and the buys that came in here were right on the halfback trade area. So the next target price where you're going to see selling is going to come in at 24.5. That's where you're going to see selling, and you're going to see a lot of selling at that price if it gets there. So that's something that you're now paying attention to, 24.5. So you all see how it's calculated? We've got a lovely bracket level here. We've got a halfback buyer here. We know that that's there for the prop stops. And if that's the prop stops, and you can already see the prop stops are taking profits, you can already tell that there is going to be a whole wad of selling opportunities. Should we trade that's at 24.5 area? There's going to be a whole bucket load of people coming out to play, getting money. So don't mistake that area. Don't lose sight of it. So welcome in, laddies and lassies. I hope you're all good this morning. The boys were busy, as I mentioned last night. We managed to progress. The Bull G was he wasn't on form, but he was doing okay. He was doing all right. He was a bit lazy, to be perfectly honest. You know, I think we had to you know, just, you know, slap him a few times to get him to move about. But you know, he's much different about that, I suppose. But he's managed to get to that point. We've managed to get we've managed to get at least a spread trade. Next week, we'll have an oil trade and we'll have a gold trade. We may have a bond trade. So there's definitely going to be a directional algorithm next week for Max, which will then the following week, because if, next week we'll link that spread trade to NinjaTrader with target prices so that we can start generating profit profiles. The following week, we'll then have the algorithms in place for the oil, the gold, and hopefully bonds. And the week after that, we'll be able to link those to a NinjaTrader account and see the profit profile we can make out of those as well. So yes, we are in great shape. We're not on target because we're being dogged with this stupid coronavirus restrictions and lockdowns, and Stu Bob's sometimes problematic in terms of the time that he's got available to do the programming across on NinjaTrader at times. But we're getting there, guys. We're getting there. Not as fast as we would all like, but we're still getting there. Anyway, welcome in, guys. Welcome in. In terms of numbers this morning, we do have some numbers, and they're quite important numbers coming out at 5:30, so just be aware of that. And you can see that core retail sales are expected to be 0.4, and retail sales at minus 0.4. And you know, one of the things that we can start to recognize from those is that they are both beats on prior numbers. Both of them are beats on prior numbers. The numbers we've seen this morning, albeit them very, very crappy numbers like the Italian trade balance numbers, which doesn't mean much. They've all beaten expectations. The Eurozone trade balance numbers did beat expectations at 9.4 against 5.6. Now, obviously, when you see trade balance numbers beating expectations, that's going to lead to demand on the euro, isn't it? Think about it. Trade balance numbers are demand, because when you start seeing those kind of numbers, you're starting to say to yourself, well, so if the euro was at bottom edges, you'd see an up move. Why? Because if you've got trade balance surplus, people are buying stuff from Europe. How do you price anything in Europe? In euros, right? So if you buy something from Germany, you've got to buy euros. If the net surplus is in Germany, you buy euros to buy the product. Net surplus. Net surplus of 9.4 against a prior of 7.9, people are going to have to make an allowance for that extra, perhaps that extra 1.5 billion euros of purchasing that they didn't have prior. So you start seeing possible buy opportunities if the euro was cheap at the time. It wasn't, unfortunately. But if it was cheap at the time, then you'd have been able to buy the euro against that bit of news. Anyway, this afternoon we've got wholesale sales out of Canada in just a couple of minutes, and we've got the US retail sales, core retail sales at 1:30 as well, finishing off the week with the University of Michigan consumer sentiment and the business inventories at 3 o'clock London time. Now remember, guys, for bonds, you mark off the 11:55 and the 1 o'clock levels. Make sure you haven't forgotten about that today. We covered it yesterday, so hopefully your memory goes long enough to last for 24 hours. We'll check on that as we get into the afternoon. So we'll get these numbers out of the way, and I'll grab a little bit of lunch, and I'll be back shortly.